Happy Saturday, everybody. I hope you guys are having a great weekend. Guys, there is a neighborhood in Franklin, Tennessee. This is a nice neighborhood. It is a very popular neighborhood. It has crashed 25%. Now, I'm going to show you the data, okay? And you guys can make your own conclusions. But I think if you do know why, you may be able to see where it's headed next. So we're going to take a look at that neighborhood. We've also got unemployment claims that we've been keeping an eye on. They are still going up. Guys, for the first time since November of 2021, closed transaction volume is up. Guys, it's up. That's a positive sign for the housing market amidst all this negativity. Oh, by the way, we had the biggest one-day jump in mortgage rates in over a year. So lots to cover in this video. My name's Ethan Flynn. I am a licensed real estate agent. Me and my team, Martin and Andy, we do help buyers and sellers, particularly in the Williamson County area. Now, if you're not cash heavy, it's not that I don't want to help you. This is just a really uncertain market, and it's a really bad time to buy, especially less than 20% down. And the reason being, the gap between your mortgage payment and your rent is just so astronomically large, given the low down payment. I just think the risk there is just so high. I would just tell you to rent. If you are cash heavy and you do want to talk, feel free to reach out. We're happy to have a conversation with you. Make sure it's a good fit for you. And it's good for us. And with that, without further ado, let's get into the data. Now, first things first, I did want to show you this because this was a milestone for me. Now, for some of you who don't know my story, like I just started on YouTube, having a blast looking at data. I was trying to find my own data because I'm a buyer at heart. I'm a real estate investor. I was looking for opportunities to buy. You guys really resonated with my housing market update videos, so I started to do it. And guys, believe it or not, there are 1,300 licensed real estate agents that helped sell a house. Look at all these that helped sell a house in January. January alone, over 1,300 licensed real estate agents. Now, the reason that's crazy, look at this. Where's it at? Right here. We sold 3 in January. I'm excited about that. And certainly it's a tribute to you guys who have been following me, who've been asking questions, who've been reaching out. It's just been the greatest experience ever. 3 closings in 1 month, and especially starting out in January, the slowest month of the year. And of those 3 guys, we had a 2.75% mortgage assumption, and we had a $2 million West Haven sale. So the spread has been wild, but the buyers that we've helped have been fantastic. It's been a lot of fun, and man, we're starting the year off really strong, and just want to say thank you. All right, let's keep going. Okay, first things first, continuing claims in Tennessee are skyrocketing, guys. We are now at 20,000 continuing claims in Tennessee. Now, this breached our previous high in January of 22 of 19,000, and we are now back to November highs. And the fact that it's trending up, I mean, January typically is a month where it would poke up, but the fact that it's trending up is, again, something we will continue to watch because I think that is a big warning sign. Now, one of the things I did was I overlaid in this red line right here is an overlay of the unemployment rate in Tennessee, or excuse me, in the Nashville area. And what you see is in June of 22, our unemployment rate peaked at 3.3%, at least in the past couple years. That was the peak. And that was also the beginning of a 10% drop in home prices. We still have yet to recover in home prices. We're still around the 460, 470 mark, which tells me that this was a pretty important milestone. Now, if you watch this, you can see that there is a correlation between continuing claims and the unemployment rate. So as continuing claims continue to creep up, are we going to see the unemployment rate creep up? If we do, what does that mean for the housing market? These are questions I have. If continuing claims continue to creep up, then people will start selling their houses. We will keep a close eye on this. But for now, Nashville's not up in new listings right now. So will it continue? Will it go up? I don't know. But new listings, this is not active listings. This is just new opportunities, new listings. They're not up year over year. The whole idea behind continuing claims is that at some point, are these going to be sellers of homes in the Nashville area? I don't know. We'll see. Now, if you remember my video last week, you remember me saying, get ready, mortgage rates going to 8%. And I do generally think mortgage rates are going to 8% again. Okay, I do. If you look at the 30-year mortgage rate and you go back, let's just look at a 5-year. Let's go back to the max. Let's look at the trend. For 40 years, we've been in a downtrend in mortgage rates. For 40 years, guys. We have now broken that downtrend, and we are now in what I believe is an uptrend. And the uptrend in the 70s lasted a decade. So this could be a decade-long thing. But the bottom line is, guys, there is massive uncertainty about mortgage rates. Do not plan on mortgage rates going down, because everybody in the real estate industry wants the line is mortgage rates are going down, buy now, refi later. And that's just not right, guys. Be very careful about that. That's not right. The QRA, the whole reason I said mortgage rates were going to explode to 8% was because of the QRA announcement this last week. Well, mortgage rates dropped from the announcement, which made no sense at all to me, because they basically said we're going to issue way more bonds than we were, which is exactly what I said would cause the interest rate spike. And, mortgage rates dropped. Everybody's like, oh, recession. There was a bank failing that day. And so everybody's like, oh, recession. And if you think banks, by the way, if you think that banks failing are going to lead to lower interest rates, what I've learned is that the Fed, more than inflation and more than employment, the Fed's number one mandate is financial stability. And they will print money and hand it out to anybody they need to keep the financial stability happening. Let's keep going. Check this out, guys. January 11th, I said, I'm calling this headline now. It will be the first month that closed volume is up for homes since November of 2021. This is for Nashville. And guess what, guys? Closed volume is up for homes. Let me show you. 1509 closed volume, whereas last year at 1414, that's 6%. That's up 6%, guys. This is the first time since November of 2021 that closed volume is up, and it's up 6%. So quite a big deal there. There's still probably going to be some stragglers coming in here. So we'll probably be like, 1525, 1550, but nonetheless, we're up 6% closed volume. Guys, we're going into February pretty strong. Inventory is going to be down. And guys, it's not just that it's down in the under million categories. In fact, if you look at where the inventory is tightest under $1 million, which I actually posted this on Twitter, this is active inventory under $1 million. Look at Rutherford County. Rutherford County had over 1,000 in active listings in January 2023. They only have 870 now coming out of January. 870, guys. That's a huge drop. Look at Williamson County. Williamson County had 476. Now they have 414. That's another huge drop. So Davidson County is increasing in active listings year over year. But there's enough counties surrounding Davidson County that are lower in the under $1 million category that under $1 million is down 4%, guys. And because of that, we're seeing a lot of contract volume stutter. I believe it's stuttering for two reasons. One, I do believe there are economic headwinds. I do wonder if people are slowing down buying because they just can't afford it. The problem with this is that where we're seeing the biggest slowdown in contract volume is in those areas that were the tightest here. Rutherford, Williamson. When we look at Davidson has had a growth in inventory, and we see contract volume is spiking pretty parallel to where it was last year. When you factor in the snowstorm, Davidson County seems to be as strong as it was last year. And Davidson County's inventory has been expanding. That leads me to believe, like when you look at Williamson, it's a good 15%, 25% lower than it was last year. Contract volume is sputtering. People can't afford the higher priced houses. Rutherford, 20% down in inventory. Look at this. They're struggling to have that big ramp like they did last year. So that's what I'm seeing. And I do believe it has to do with active listings, but you guys tell me, what do you think it has to do with? Tell me what you think it has to do with. Now, this is super interesting. We've got Ladd Park over here. It's just southeast of Franklin, Tennessee, just east of 65. Let me move my head over here. Right there. Okay. What I want to show you here is that the median value since Q2 of 22, remember that was the peak. The median sales price in this neighborhood was $332. Guess what? It's now at $253. It has dropped 25%. Now, if you don't know Ladd Park, guys, this is a really, really nice area. These houses are beautiful. They're big. There's all kinds of amenities. There's even, you see Harpeth River going through here. There's like a drop off of a canoe. You can go I guess kayaking and canoeing. They're building a park over here. I mean, there's a lot going on there. I think it's a great place long term. Dropped 25%. But why did it drop 25%? Well, the reason it dropped 25% is because there are houses like this selling just up the street in Water's Edge. And look at this. This is a new build, 4-bed, 3-bath, 3,200 square foot for $271 a foot. $271 a foot. And when you're trying to sell a house down here for $1 million, the same size, and you can get a new build that's literally just so you know, it's literally right here. It's the neighborhood next to it. Okay. So you're getting a lot of the same amenities, a lot of the same access, a lot of the same experience, but it's a brand new built house. It's going to make massive problems in this neighborhood. Now, here's the thing. There's no more new builds, guys, for single family homes. Now, I didn't check every builder, and I think this is good all, but I didn't check every builder. But there are no more new build house listings. I think they've all sold. And if they have all sold, then that means Lad Park is poised to do much, much better this year as the new builds are drying up. Guys, they have to go find these new builds. I don't care what anybody says. People can say there's a housing shortage, whatever. There is a housing shortage, in my opinion, affordable housing shortage, or there isn't a housing shortage because there's more houses per capita, however you want to say it. There may be more houses per capita, guys, but we also a lot of our neighborhoods turned into hotels. Okay. So now all of a sudden there's more than one use for single families. And until that use gets changed, or there's maybe there's a cyclical component to it where there's a recession and people stop using as hotels and they have to sell. Unless that happens, guys, we have a shortage of housing. And with the massive migration boom in Tennessee, there's a shortage. So bottom line is builders are soaking that up and they are putting pressure on neighborhoods like this. This neighborhood was built, the past decade or two, and then this neighborhood comes up and just undercuts it with new builds. That puts massive pressure on these houses. That's what I'm telling you guys. If you can look around and see opportunity for new builds, you better make sure that you're buying a house that could compete with a new build in the next 5 or so years. And that leads me to my next point. Okay. This is Franklin area. Here's Lad Park. You can see there are not a lot of listings. I only have 6 marked with 55 closed, but look at the price trend. Price trend's such a disaster. But look out to the east of Lad Park. You go out towards 840 out here. I mean, this is pretty far out there in Arrington area. Kings Chapel. Guys, Kings Chapel, there's no scarcity of land out here to build another neighborhood. And so when I look at Kings Chapel, I think this is the next neighborhood to crash. Okay. That's personally what I think. I don't know that for sure, guys. I don't spend a ton of time out there. And so I don't know, but if I was buying in Kings Chapel, I would be extraordinarily careful because look, 350 to 300, and look at the trend. All these new builds coming in. Let's see how many are new builds. Yeah, look at this. You can see, look at the to be built prices over here. Way, way lower than everything else. So, and you can see if I was buying out there, I'd be looking for something around 250 a foot. Now I do know, let's see here. This is a new build for 250 a foot. And then this was existing. I looked at this one earlier. It's like a 2008 house. So it was a little bit older. But I would not be buying over a 300 foot, or I'd certainly be careful. Or, I mean, if you just want it, you want it. But from a financial perspective, I'd be very careful about buying some of these more expensive houses because, guys, there's no scarcity of land out here. They can literally just go next. They could start another neighborhood and they can build the same exact quality houses. So you're really going to be pushed to cost to build. Now here, as these new builds dry up and you're close to the interstate, close proximity, and these neighborhoods mature, like West Haven. West Haven's a maturing neighborhood. They still have a lot of lots. I don't know how many lots they have left, but as these neighborhoods mature and you see the volume come in and you see stability, you still want to be watching what are the new builds selling for and how are they selling. But it's a lot less risky than if there's no shortage of land and they could just build a house right next to yours and then they could just build a neighborhood right next to yours. So you be very, very careful. Guys, these are $1 million neighborhoods out here. These are $1 million neighborhoods. And as you can see, and I've been building this out, I continue to build it out. The green areas, almost all the green areas are $1 million neighborhoods. Okay, so there's a lot of inventory out here for $1 million plus. You get into these red areas, there's nothing. And that's why people aren't buying. And it's very tight. And it's kind of a nasty market, guys. The quality that you're getting for $500,000 is much, much lower. I think about it like this. If you buy $1 million house, are you getting double the value of a $500,000 house? And I would argue yes. Now, that doesn't mean you can afford it, okay? So I'm not talking about affordability here. But the bottom line is that everybody's trying to buy a $500,000 house, and the quality is low. The listings are really junky, a lot of them. It just feels like you're taken advantage of in the $500,000 to $700,000 market. Whereas when you get up to the $1 million range, it's a lot better. But you have to be careful because there's landmines out there, right? You have $1 million neighborhoods that have that health, that have that volume, and then you've got $1 million neighborhoods where they're just putting them up. You want to be careful. You want to be really trying to figure out what the cost to build is because you're buying in a neighborhood that you're never gonna compete with the builders. Okay, so just be careful if you're buying that $1 million house. There are great neighborhoods, but they're also very risky. Down here, The June Lake build out, lots of listings, and they're building this area out really well. They're creating a new interchange that's getting ready to open. But you can buy $1 million house in June Lake over 4,000 square feet. Nice house for $1 million, over 4,000 square feet. Just be careful, guys. That's my big point. Just be careful. If you are in Ladd Park and you want to list your house, I would absolutely love to do a listing in Ladd Park. I just think the strategic component to it, especially with what's happening, the dynamics of the new builds, I would love to help you. So if you're listing in Ladd Park, reach out. If you want to buy, reach out. Be careful out there, guys. It's full of landmines. Don't let anybody tell you or guarantee you the prices only go up. They don't. This neighborhood dropped 25%. Have a good weekend.